Welcome to Silicon Scoop, where we dive into the latest tech news impacting the world. Join John Irwin and the Startup Coach as they explore the tech news that matters to you. Stay ahead, stay informed, and now on with the show.
OpenAI wants a $1 trillion debut, and Sam Altman reportedly refuses to take the company public for less. Could protect that valuation, but it also gives more time to steal the spotlight and forces Microsoft to keep defending one of history's biggest AI bets. So OpenAI confidentially submitted a draft S1 on June 8th, and we talked about this, but officially said it has not decided when or even whether to move forward soon. Subsequent reporting says executives are considering waiting until 2027 rather than accepting a public valuation now below $1 trillion. So this IPO would test whether public investors believe today's astronomical private AI valuations or demand evidence of substantial profits before paying trillion-dollar prices. What do you think about this move, John?
This surprised me, and I thought it had more to do with the fact that they weren't ready until I actually read the article. And so let's kind of talk about why to delay an IPO. So traditionally, obviously, companies go public to raise capital, where OpenAI is a little different because they've already raised an unprecedented amount of private funding. So the recent financing rounds, they valued the company at $300 billion. They've raised tens of billions of dollars. They've got massive backing from institutional investors, and they've got a long runway for expansion, apparently. I didn't know that. I thought they were running low on funds. And the other thing, too, is now they don't have to disclose anything because obviously they've done a few controversial things, like first they were not profit, now they were for profit, all that sort of stuff. So remaining private allows them to avoid quarterly earnings pressure. They can continue with their long-term AI investments. They can spend aggressively on infrastructure. They can avoid constant public scrutiny, and they can maintain strategic flexibility. So I think the other part to this, too, is that the Microsoft relationship complicates things because Microsoft has invested tens of billions of dollars into OpenAI. And so unlike traditional startup investment, Microsoft's economic interest, it involves both ownership and commercial agreements, which is kind of different. So the questions investors continue asking include, how much of OpenAI does Microsoft actually own? And they would have to disclose that. How will profits eventually be shared? What happens if OpenAI becomes fully independent? Will Microsoft retain exclusive cloud rights? So a lot of these answers can affect both companies' valuations. And so OpenAI has an unusual corporate structure as well. There's a whole bunch of things that make sense now that I've read into the details. What do you think? Do you think this is... what are your thoughts on this?
Well, we talked earlier about these three IPOs, and I was wondering if there was enough investment to...
That's right. Yeah.
Keep all of this going. Is it enough for 3 trillion IPOs? Investors really have only so many pockets for all this stuff. So I definitely think that's a concern. But let's just talk about the numbers for a bit. I think OpenAI was a little bit short on cash, but they raised $122 billion in committed capital in March. So that financing, it valued the company at $852 billion post-money. 1 trillion listing would require an increase of approximately 148 billion or 17.4% over that valuation. And we talk about Microsoft ownership. Microsoft reported owning approximately 27% of OpenAI on an as converted diluted basis following the 2025 recapitalization. So there's been some more investment talk and stuff since then. So, that's probably changed somewhat. And Anthropic raised $65 billion at $965 billion post-money valuation in May. Microsoft AI business exceeded $37 billion annual revenue run rate, up 123% year over year in Q3 2026. So The story is really driven by the economics of the frontier model scaling. Training and serving advanced models requires enormous clusters of GPUs and specialized accelerators, high bandwidth memory, networking infrastructure, electricity, and cooling. The valuation assumes that OpenAI can convert capital intensive infrastructure into recurring revenue from ChatGPT, enterprise subscriptions, APIs, coding products, and autonomous agents, while eventually reducing costs of producing each answer. And we also talked about there's two things hardware-wise that OpenAI is getting into. They want to build their own chips, and they have some sort of device going on with Johnny Ive, which may, be a part of this. So I think they're delaying because it's not optical right now based on where their revenue is at, where their spend is at. And they've got enough stuff coming out or announcements in the next 6 months to a year about potential starting a foundry, starting the chip creation, maybe this other device that will take them to the next level. Also, they're changing their subscription models. And as I keep saying, they keep telling us it's cheaper and cheaper every time a model comes out. But every new model costs consumers more and more every time. So they're raising the revenue. If they wait 2 or 3 more models, it'll be $100 per million output tokens, and the revenue will go from here to here. So that is part of the reason too. I think that they don't quite stand up against Anthropic and SpaceX now, and SpaceX does have the best with their hardware, with all the different systems they have the best value. However, and that's why they're 1.878 trillion or whatever it is. The Anthropic one looks like it's definitely number 2 in that platform, where OpenAI is number 3 or maybe even less than that. And I think they need to move that needle if they want to get that up to $1 trillion. So that's where I think they're headed, and they need to let a couple more things out before they're going to be able to value themselves there.
Yeah, true. Yeah. So Microsoft definitely benefits from this, and we talked about that. So let's talk about why they benefit. So they continue receiving Azure revenue, enterprise AI customers, Office Copilot integration, GitHub Copilot growth, and exclusive commercial partnerships, while they avoid market volatility, lockup expirations, ownership dilution concerns, and public investor pressure around OpenAI's quarterly performance. So it's a win for both companies to delay the IPO. And I thought it was more because they were worried about Anthropic, but no, it's more because of the structure of the investments that they have and their partnerships that they have and things like that. So they're a lot more complex than I had thought originally. And we'll never know how complex until they go public.
Yeah, agreed. And it's going to be, I think they're going to be really scrutinized when they go public because of their messed up history. So we'll have to see. They were not-for-profit at one point, then they decided to change and blah, blah, blah. So that was everything. OpenAI's IPO delay is a high-stakes attempt to defend $1 trillion narrative before public investors finally get to inspect the financial machinery underneath. Would you buy OpenAI at $1 trillion valuation, or does Rise make that price impossible to justify? Let us know what your thoughts are in the comments below.
Tired of drowning in repetitive tasks while your competitors race ahead? Every minute you spend on manual data entry, scheduling, and routine processes is a minute you're not growing your business. Flowgrammer.ca transforms your workflow chaos into seamless automation. We build AI-powered systems that handle your busy work so you can focus on what actually makes you money. Our clients typically save 15 plus hours per week and see their productivity double within 60 days. Visit flowgrammer.ca for a free automation audit. That's flowgrammer.ca. Stop working in your business and start working on it.
What do you got going on, John?
Just plugging away, helping companies with government funding, attending events, probably startup drinks or a Flowgrammer event. How about you, Craig?
Lots of stuff going on. I honestly don't know when this is going out. I have to check. I think it's going to go out in April. But there's all sorts of stuff going on. If you don't know about OpenClaw, it's the latest AI automation agent that's taken the world by storm in 2026, and OpenClaw Toronto chapter just launched, and we have all sorts of events going on. So check out openclawto.com. Our first demo night is April 14th. We have a Builder Cafe on April 10th. We have a bunch of other events. There's updates every day. We've deconstructed the latest 2 betas over the weekend that was launched in OpenClaw and what you should do about them. There's a bunch of articles over there. Go check that out. We're also over at flowgrammer.ca, where we do N8N automations. We run the Flowgrammer community. I do Builders Hub and connectivity for AI and business automation agents. And for everything else, head over to TorontoStarts, where we hook up startups and investors at our Startup Investor Drinks. We do mentoring, we do workshops, we have a list of investors. There's a whole bunch of content over. You can also book me over there if you want a meeting with me to talk about whatever, help your startup. Check out TorontoStarts.com. But John, if people are looking for non-dilutive funding, where should they go and what is that?
Yeah, non-dilutive funding. We're talking government grants, tax credits. Come find me on LinkedIn if you have any questions. Right now is shred time, SRNED. But come reach out to me too. If you've got a startup, if you've got a company, reach out to me if you have any questions. And if they have company questions about their startup in general, where do they find you, Craig?
Yeah, find me at TorontoStarts.com. But John, just before we go, something's open right now, and it's closing May 31st. Thank you. Can Export. And what?
Yeah. So
what
if
should
you have
people
at
know
least
about that?
300,000 in revenue in the previous year, and you're looking to expand outside of Canada, reach out to me, and we can put together. We can talk about an application for Can Export.
All the links we talked about will be in the show notes, wherever you're watching this. Thanks for watching, everybody. Leave us a comment, give us a like, give us a subscribe. We really appreciate it. Thanks, everyone.
Thanks, everyone.
Thanks for tuning in to Silicon Scoop. We hope you enjoyed this episode's dive into the latest tech news. Stay connected with John Irwin and the Startup Coach on LinkedIn and subscribe for more insights and updates. Until next time, stay ahead, stay informed.